Here's a very simplified example. Here's a happy couple. Husband 61, wife 60, married, 2 grown-up children. He has an £18,500 a year private pension. She has £1,500 a year state pension. He gets a UK state pension in 4 years' time. He has an S1. Please just circle S1, because if you're staying for Tony's presentation, that is important. The S1 is so important. He has an S1, which is an E106, which runs out in 2 years' time. She has an S1 because she is a state pensioner. When his runs out in 2 years' time, ladies, if you're in this situation, please listen very, very carefully to what I'm about to say. Because in 2 years' time, this man is going to say to his wife, "My darling, my cherished, my loved one, please will you put me on your S1, because mine's run out, yours you've got because you're a state pensioner. Please put me on your S1 as your dependent, otherwise I have to pay 8% healthcare contributions on my pension income of £18,500 a year." Ladies, make a note of that and don't sell yourselves cheaply. They've got Peps and ISAs 50,000, bank accounts 50,000, selling in the UK for 400, buying in France for 200, and please notice the easy way I say it, there's £300,000 swilling around. Now, for those of you that are concerned about income tax, take note. Gross pension in the UK, 20,000, and I do apologise for my enthusiasm about the exchange rate used there, but it made my maths very easy. I use an exchange rate of 120. The equivalent pension in France is €24,000. Income tax in the UK, 2,405. Income tax, that is not a typing error, that is fact. Income tax, £443. In the UK, they get net 17,600. In France, they get 19,600. And look at the tax rate, 5.5% tax rate. Not 20%, 5.5% tax rate. So university pension schemes, good news, NHS pension schemes, you're taxed in France, you're going to be getting those sort of tax rates. The £300,000, the happy couple thought, I'm going to stick it in a building society in the UK, I'm going to stick it in a bank in France, or I'm going to go offshore. Whoopie-doo. Wherever your money is, your interest is going to be liable to tax. And again, my enthusiasm ran amok. You're getting 3% interest. I do apologise. Whether you like it or not, you're actually going to get €10,800 taxable. It's pushed you, that interest has now pushed you into the 14% tax band. So you're going to get 14% tax plus 12.3% social charges. So you're going to get net €7,600. Okay? However, this happy couple took 3% income. They decided to take 3% income. They took advice and they put it into a tax-efficient vehicle. And if ever you hear the expression assurance fee in France, translated means life assurance. Assurance fee in France is the most popular form of investment in France, extremely tax-efficient. They took advice, put the money into an assurance fee, and decided to take €10,800 income. Look at the amount that was taxable, €324, and I'm embarrassed to say the tax they had to pay was €57.